Hi guys, welcome back to High Yield Intraday Trading. I hope everybody is doing good. So today we will go ahead and discuss how to use Fibonacci retracements. Okay, so many of us know that there is a tool called as Fibonacci retracement, but we are not aware how exactly to use or how exactly to draw it on the charts. Okay, so it's very important to know how to draw it, because if you draw the Fibonacci retracement wrong, then your whole calculation, your whole readings goes wrong, and the result will be a losing trade. Okay, so firstly, what is a Fibonacci retracement? Fibonacci retracement is a technical tool that can be used to know how much a stock can retrace. Now the next question comes up, what is retracement? So there are two parts of retracements. Okay, one retracement happens when the stock is in a bull run, and the other retracement happens when the stock is in a bear run. So what I mean to say is, if you have a stock which is continuously going up, it is not possible for a stock to go up continuously. At some point it has to come down for some time, right? Now that coming down of the stock for some time is called as the retracement when a stock is continuously moving up. Similarly, on the other hand, if you have got a stock which is continuously moving down, okay, which is continuously going down, at some point it will try to come up a bit, right? So in this case, the coming up of the stock for some time is called as the retracement, wherein the stock was in a continuous bear run. Okay, so that is what is retracement. Okay, so it's very important to know in which direction is the stock trending, and once you know the trend of the stock, you need to have a reference point to draw the Fibonacci retracement. Okay, now in this video we will take the 200 SMA as the reference point. As we know that 200 SMA, 200 simple moving average, is the most respected support and resistance level. We will consider that. Okay, for those who don't know about 200 SMA, I would request you to go through my previous video about the same and then continue with this video. Okay, so let me take you to the charts to explain it more clearly. Okay, so I took a stock which was in a continuous bull run, a stock which is continuously going up. So Jindal Steel is the one which I found. Okay, that was in a continuous bull run, and if you look at it right now, it has started the bear run right now, right? So let's get back to the bull run here. Okay, so before I explain this to you, okay, let me show you what is a Fibonacci retracement. How do you draw it? Okay, now Fibonacci retracement, you will get it on any of the brokers platform. It is a very common technical tool that is available everywhere. Okay, so this is how it looks like. Okay, let me just draw it. So you draw it like this. Okay, so you draw it from a low point to a higher point. Okay, now what will be the low point, what will be the higher point, I will let you know on the charts. Okay, as of now I'm just showing you how the Fibonacci retracement looks like. Okay, so once you draw this line, automatically you will see some levels coming up: 38.2, 50 and 61.8. now these three levels are the retracement levels. Okay, now let's say, for example, if the stock is going up, okay, just a moment, let's say the stock is going up like this, okay, and it reaches a point post which it starts coming down. Okay, now this coming down of the stock is called as the retracement. Now what's happening? The stock is in a bull run. That means that continuously the stock is going up, but as I said, it is not possible for any stock to keep moving up continuously. At some point it has to come down. So the coming down of the stock, this portion, is called as the retracement. Now as a trader, you need to know, let's say for example you have a long position in Jindal Steel. Okay, so when the retracement happens, you will be interested to know till what point the retracement will happen, so that you can decide whether you should continue holding your position or you should exit your position. So that is when we draw the Fibonacci retracement. Okay, so if the stock continues to fall, the expectation is 38.2. okay, this line will act as a support, and from here the stock should get a support and start moving up further. If 38.2 is breached, the next support level will be 50%. If 50% is breached, the next support level is 61.8%. Now if you ask me which is the most respected levels, The respected level depends on the time frames. Okay, so let's say for example you are a positional trader, so basically 50% and 61.8% are the most respected levels for positional trading. Okay, so I hope you are clear now. What are these levels, what is retracement, and what is expected when we draw the Fibonacci retracement. Okay, now let's get on to the charts. Let me remove this. Alright, and let me bring in the chart here. Okay, now the blue line that you see here is the 200 SMA, 200 simple moving average. So as a positional trader, you will look to go long in the scripts, like you will make use of the CNC order, the cash and carry order. Okay, so as a positional trader, you are not allowed to short the stock. You are always expected to go long in a stock. Okay, so as per the rule goes, since 200 SMA works as a very strong support and resistance, when a particular candlestick, okay, when a particular candlestick crosses the 200 SMA in the upward direction, the way it is doing here, okay, here, let me make it a bit bigger. Okay, so this is the green candle which actually breaches the 200 SMA and closes above it. So this triggers the point of your entry as a positional trader in the long direction. You can buy the stock once the candle has closed above the 200 SMA, right? So let's say for example you so this is 1 day chart of Jindal Steel, as you can see here, right? So you need to wait for this green candle to close, then only you can be sure that okay, 200 SMA has been breached now and I can take a long position starting tomorrow or any other day. Okay, so let's say for the next day it is a red candle, so you might want to wait for the next day. Okay, so you might take a long entry at this on this day. Okay, so this is how you take the long entries. Okay, so now coming to the Fibonacci retracement, as I told earlier, in order for you to draw the Fibonacci retracement, you need to have a reference point, and in this example we are having 200 SMA as the reference point. Okay, so how do we draw the Fibonacci retracement? Okay, now consider that these candles do not exist. Okay, you are at this day. By seeing the 200 SMA being breached, you took a long position at this candle. Okay, now the stock started moving in your expected direction. Okay, and some fine day it reached this green candle. Okay, now you have to consider that all the candles that you see after this green candle are not plotted. Okay, so we are going to the present day of your trade. Okay, that is 3rd February 2017. Okay, so we don't have any candles plotted after 3rd February 2017. 3rd February 2017 is the last candle. Okay, now it has already given you a move from 74.25 rupees to approximately 92 rupees .35 rupees. Okay, so it is a big move, right? For a 70 rupees stock, I mean a move of how much? 13 to 12 rupees is a big move. So at this candle, this green candle, you might be interested to know, okay, that whether the stock will retrace or it will continue the up move. Okay, now let's say the next day you see a green candle here, this red candle here. Okay, now since you have seen the red candle, you will be very much interested to know till what point Jindal Steel will retrace. Okay, only if you know the retracement points you can decide whether you will continue holding the trade, okay, or it is time for you to exit the trade. Okay, now this is the point where we know that we need to use the Fibonacci retracement. We need to draw the Fibonacci retracement. Okay, so the lowest point of the Fibonacci retracement will be the recent swing low before the 200 SMA was breached. Listen to it very carefully, because this point will decide the correctness of your drawing. Okay, so this is the point where the 200 SMA was breached in the upward direction, right? So when you are ready to draw the Fibonacci retracement, your lowest point will be the recent swing low before the 200 SMA was breached. So in this case, what is that point? This is the point, right? So you click here, okay, and you get on to the top, the recent top and leave it there. Okay, now if I maximize the chart, it will be a bit clearer to you. Okay, so we drew it from the recent swing low before the 200 SMA was breached, and we extended the line all the way till the recent top, right? And we got the 3 levels. Remember, whenever you are drawing the Fibonacci retracement in an uptrending market, you have to draw the Fibonacci retracement from low to high, not from high to low. It will be wrong. Okay, it has to be drawn from low to high. Okay, now you got the 3 levels. Very clearly, you can see that the first support is 38.2%, right? And this red candle, when it comes down, it never touched the 38.2%, so that tells you that you are safe and you can continue with the trade. Okay, so you stay back in the trade, and eventually it went up. It spiked up continuously for 4 to 5 days. Now this is the red candle. After the continuous spike of 5 days, on the 6th day you got a red candle. Now this is the day, okay, 28th February 2017 is the day when you would be interested to know whether this is a peak where you should be getting out of the trade, or can you continue the trade for few more days. Now how will you draw the Fibonacci retracement on this day? The same thing, swing low. Okay, the swing low, the recent swing low before the 200 SMA was breached, that will be your low point, and you extend the line all the way to the recent high. So now this is the recent high. Previously this one was the recent high. Got it? This is how you draw Fibonacci retracement. And then you know that 38.20 is the first support, and the candlesticks are not even close to them. Okay, and so that is the reason you can stay back. Okay, the next Fibonacci retracement you might be interested is here, when the new high was made. Okay, and as you can see here, how beautifully it respects the Fibonacci levels, right? It came down once, touched 38.2, it was not able to breach and come down, went up again, retested the levels. Okay, this red candle did breach the 38.2 level, but the very next candle again took it up. So here also you can have your position intact. Third time it retested, not able to sustain the down move, again moved up. Okay, this is how the Fibonacci retracement levels are obeyed, are respected. Okay, so similarly the next high where you might be interested is here. Okay, draw the Fibonacci levels to that level, to the recent high, and see here also it is getting respected. Okay, Jindal Steel is not able to breach the 38.2%, which is the first retracement level in Fibonacci. It is being respected big time, right? This red candle breached it, the very next candle again took it up, and again the upward flow moved. Okay, similarly you keep changing the recent high as and when a new recent high is being made, and see what is the retracement level, and accordingly you can decide whether you should stay back in the trade or you should come out of the trade. Okay, now there will be people who will be coming out of the trade once 38.2% is breached, but according to me, wait for at least 50% to be breached, because even if it comes down to 50% and it breaches 50%, you are in a big profit. Okay, so anyways you are riding the profit, so why not follow the technicals? Okay, because we know that 50% is a strong support level in Fibonacci. Okay, so you can wait. Okay, so this is how you draw Fibonacci, read it, and apply it on the charts. Okay, now let's come to a point where it started the downtrend. Okay, so I have to make it a bit smaller. Let me draw the Fibonacci level and then I will make it bigger. Okay, so this is the point. Okay, this is the recent high. So right now you bought the stock at around 74 or 75 rupees. Right now you are at 294.70 rupees. Okay, see the power of 200 SMA and see how beautifully the Fibonacci retracement levels are respected by the stock. Okay, so now let me make it bigger, a bit bigger, so that I can explain stuffs. Okay, so here you draw the Fibonacci retracement and you know that this is the first level of support. This was also respected. Okay, it came down, it just touched it, it was not able to breach it. Okay, because the closure of the red candle was above the above the first level of Fibonacci support, right? So it closed above it and then it again started moving. Okay, now the day comes when the first level of the Fibonacci support was breached and the 200 SMA was also breached. Okay, so this would be the right time for you to exit the trade. The reason is, since 200 SMA is the most respected support and resistance level, now the 200 SMA is working as a resistance. Previously it was working as a support throughout these days or months or years, whatever you take it. Okay, but now as you can see here, this red candle actually breached 200 SMA and it was not able to sustain. Okay, so it is time for you to come out of the trade. Okay, so this you can take 200 SMA as a point where you should come out of the trade, and if you see that the 200 SMA and the first level of support, that is the Fibonacci level of support, is being breached in the downward direction, you square up your trade. Okay, I hope this is clear. I hope now you know how to draw Fibonacci retracement in an upgoing market. Now let's consider a downgoing market. Okay, let's say that the trend of the stock is downtrend, is a downtrend. Okay, for like this. So in this case, you will draw the Fibonacci extension. Okay, so which one is the candle which breached the 200 SMA in the downward direction? This is the candle, right? So when the trend is down, you need to draw the Fibonacci extension from the top to the bottom. Okay, so the top will be the recent swing high before the 200 SMA was breached in the downward direction. So this is the point, right? So you click it here and you bring it all the way till here. Like I'm telling here, but before that you have many other new lows, like this is a new low. So you might be interested in knowing if you draw it till here, right? So the first 38.20 will be a resistance. See, it is being respected. Now the next new low was here, right? See, it is far away, again respected. Now the next one is here. 38.2 is far away, again respected. Okay, like that, as and when new lows are created, you can keep changing the Fibonacci drawing and you can know the levels of retracements. Okay, so this is how you use Fibonacci retracement, guys. Now this video just explains the way to draw and read it. Okay, it's not a strategy, because you can use any other technicals according to your choice, according to your comfort zone. Okay, in any other time frame, but what's important is to have a reference point. Okay, and in this video I took 200 SMA as a reference point, but in real you can have any other SMA or EMA or any other technicals as your reference point. Okay, so basically there is much more to it, okay, which is out of scope of this video, but this is the very basic of the usage of the Fibonacci retracement, and this should clear your funda of how to use and draw and read the Fibonacci retracement. Okay, so that's it, guys. This is what I wanted to share with you, and I hope it will be helpful to you. And as always, would request you to like and subscribe to my YouTube channel, and also please join in my Telegram channel, the link to which will be given in the description section. Okay, and I will see you all later. You all have a very good day. I'll see you later. Bye bye.